Omicron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's take a look at what happened overnight. Global equity markets rallying as the UK went to the polls while US markets were closed for Independence Day. Now, London's FTSE 100 gained almost 1% in its best session in 2 months as polling took place, with the opposition Labour Party set to win the general election in a landslide. Medical equipment and services stocks gained, with Smith & Nephew shares surging after Sevian Capital disclosed a 5% stake in the company. The car and parts sector rose on data showing new car registrations in the UK increased in June to more than 1 million registrations in the first half, the most since 2019. Banking giant Barclays gained after the bank said it had agreed to sell its German consumer finance business for a small premium to net assets and payable in cash. And across the channel, European shares rose on optimism around US interest rate cuts following soft economic data there. French stocks continue to rise ahead of the second round of parliamentary elections to be held this weekend, with lenders such as Société Générale and BNP Paribas gaining. Well, exit polls show the UK's opposition Labour Party will be swept into power in a landslide, ending the Conservative Party's 14-year rule. That sets up Keir Starmer to become Britain's new leader and take control at an economy that is struggling to grow, with promises that he'll embark on nationwide reform. Meanwhile, in Europe, minutes from the ECB's last meeting have revealed policymakers' thinking as they delivered a 25 basis point cut in interest rates. The minutes said that even following a 25 basis point cut, interest rates would remain in restrictive territory in relation to any current estimate of the natural or neutral rate of interest. In other data, German factory orders fell 1.6% month on month in May, in further evidence of a weakening manufacturing sector there. And Eurozone bond yields have edged higher, with Germany's 2-year yield, which is more sensitive to European Central Bank rate expectations, up to 2.93%. Now, Britain's pound is little changed despite the expected change of government in the UK, while the US dollar has weakened in the wake of soft US economic data. Excuse me. The Aussie trading at 67.2 US cents. Well, for market reaction to the UK election, I caught up with Fiona Cincotta from City Index in London.
We went into the start of the election campaign. Labour had a strong lead in the polls, and they managed to maintain that lead all the way through the campaign. And now we're seeing that come through in the exit polls. I mean, they've got very strong seat numbers, around 410 against 131 for the Conservatives. So, it's a really strong majority that they've got. And I think, that's what was expected. So it hasn't really been any major surprises as far as this election is concerned. And I think that's really being reflected in the fact that we haven't really seen the pound move much on the back of these numbers coming through. Now, obviously, as you pointed out, they are exit polls, but I think, we get a very good sense of what the picture is, and that's a sort of very solid Labour win.
Yeah, in fact, I note that that volatility in the currency, bonds, the stock market, near multi-year lows. That's, I guess, you compare that with the last couple of years where there's been a lot of volatility.
Yeah, and I think this is a really good election to win, because if we think about sort of the position of the UK, if we think about the position of what we're expecting to happen with the Bank of England, then actually, growth is, we're not we're recovering from the downturn that we've had. Been a slow recovery. We are expected to see things move in the right direction as far as growth is concerned. We're also expecting that Bank of England to start cutting interest rates potentially as soon as August. So again, that's going to be a real uplift for the for households, for businesses, for the economy. That will be a good move. So that's going to be quite an encouraging and upbeat moment for the new Labour Party. But I think it's quite interesting just to think about really what the Labour Party can do and what this means for the UK economy. And actually, if we think about sort of what their manifesto is showing, they're showing around 9 billion in increased spending, and that's to be funded by around 9 billion in increased tax revenue. But then if you think about that in the scale of the size of the £3 trillion UK economy, that's really quite modest. And the Labour Party does have a lack of really headroom to really adjust or make dramatic changes to fiscal policy. So what, the Bank of England's going to be probably looking at this thinking, well, there's not too much going on here. There's no particular reason right now for them to change their growth outlook, their inflation outlook. And so actually, I think the focus is going to now switch very quickly back to the Bank of England, who come out of this blackout period that they've been in since inflation dropped to that 2% level, which was when Rishi Sunak, the Prime Minister, announced the election was to come. So we haven't heard from the Bank of England since inflation dropped to that level. Now the Bank of England come out of that blackout period, we're going to start hearing from them. And I think that's going to have more of an impact on the pound right now than this election.
It's interesting, Fiona, the outgoing Conservative government appeared to have a bit of a prickly relationship with business. I do note that Labor's pledge is not to raise corporation tax. Clearly that would be welcomed by business in the UK.
Yeah, completely. And I mean, I think we have had in their manifesto, they did sort of set out some broad plans. But I think as far as sort of the next step for really what we can expect from Labour, we will hear in the autumn budget. So there's just going to be a period now where, Labour are going to sort of settle in, they're going to get to grips with where we actually are as far as the economy is concerned. And then we will hear a lot more from them, I think, when we get that autumn budget. Obviously, they do have a very large majority. So I think that is something that we do obviously need to keep in mind, as well, as far as sort of, when laws and regulations are sort of brought in. But I think, broadly speaking, the business community seems to be looking forward to a change and a potential support from the Labour government.
Now, meanwhile, Fiona, across the Channel, the French hold their second round of parliamentary elections. It's interesting that the UK is moving to the left of politics, whereas other countries, in particular France, appear to be moving to the right. We also heard from the ECB, their minutes were released from the last meeting, of course, where they cut by 25 basis points, but emphasising that there's a need to remain restrictive there in policy.
Yes, that's right. So there is a lot going on in the Eurozone right now. Obviously, the French elections, I think, have really been catching more attention and causing a little bit more volatility than the UK elections. And that's basically because the result is not as widely as expected and as baked in as the UK result was. So we saw after that first round of voting actually quite a relief rally in the Euro, that Marine Le Pen's far right national rally didn't do as well as perhaps some of those polls had expected them to do. And that's just raised those questions about, will the party be able to win enough support to get an absolute majority in the second round of voting on Sunday? And it looks like that might not be possible. And for the market, that's a good thing, because the market was fearing this idea that sort of, the far right coming into power, if they have an absolute majority, might look to increase spending quite considerably, which would be bad news for French debt levels. But it seems that those fears are actually a bit overdone, and potentially we could be looking at a hung parliament in France, which bizarrely enough is actually considered the positive outcome. So, with that expectations, the euro has been a little bit more supported. We've seen the CAC recover from losses that it had been experiencing. But as you said, we also got those minutes from the ECB. They were interesting because they were from that meeting where they cut interest rates for the first time in several years. And they haven't committed to another rate cut yet. So, we know that they are expected to cut rates potentially a couple of times between now and the end of the year, but they're not cornering themselves with a specific meeting or date. Very much looking to see how the inflation and growth continue to play out. We've had inflation data recently. It was down to 2.5%, so it's resumed that downward trend, which is good news. But service sector inflation is still up over 4%, so it's still a little bit sticky. So they're going to want to see that come down before they really start sort of signalling to the next rate cut.
That is Fiona Cincotta from CityNex in London. In fact, those election results will begin to become more definitive this afternoon, Australian time. The result of the UK election. Let's take a look at where we're likely to get going in just a couple of minutes' time. SPI futures are off by about 0.1%. So we'll be tracking that at the open. Stay with us, it's just around the corner.